Here is the paradox Gann trusted. The market pays the trader who can do least, longest. He inverted the common belief that profit belongs to the fastest. He waited. He measured. He let time make the decision. Gann called time the controlling factor. Price is obedient when the clock aligns. This quiet defiance cuts where FOMO, overtrading, and the hunt for prediction exhaust the mind. Most chase movement. The professional waits for confirmation. Curiosity begins when you see how little is actually required. A few levels, a few clocks, a few rules, applied with patience. If that sounds almost too simple, that is the point: simplicity enforced by discipline. If you have ever traded your nerves instead of your rules, stay with me. Your mindset manual starts with a mechanistic image, a master clock driving an engine. We watch cycles and windows. We respect anniversaries. We mark prior highs and lows as definite reference. The enemy is impatience disguised as insight. The law is confirmation over prediction, demand confluence, time window plus price level plus behavior. Observe the swing chart. If the current setback is smaller in price and duration than the last decline, the trend holds a rule Gann framed as overbalance. Require a close crossing old levels, then a secondary test on lower volume. Enter only after the test, risk small, scale only when harmony persists. One action, many non-actions. Psychological resolution feels like boredom. You do not need constant excitement. You need definite signals. You will watch ranges narrow, volume dry, and emotion cool. When the market returns to a level calmly, you note it, notate it, and let it finish its test. If the secret is to wait, what exactly are we waiting for? In the movement, we name the first confirmation and give it a clock. Here is the paradox Gann lived by. Markets move because most traders do, yet the profits flow to the one who refuses to move first. He called it the law of waiting time, the master clock, price the dial. When the crowd lunges on feeling, the disciplined observer measures. This film opens at that quiet edge, where patience is not delay but instrument. You feel the itch, FOMO, the quick click, the need to be in. He answered that itch with a rule: confirmation beats prediction. Within the first window, notice what rises in you: boredom, then agitation. Gann treated those as market signals. If emotion is high, information is low. If action is easy, risk is hidden. Authority rests in the swing chart, in the overbalance of time and price, in the secondary test that retouches an old level without force. These are definite mechanical checks, not opinions. The enemy is haste. Haste makes the chart look smaller than it is. Haste collapses cycles into noise. We slow the reel: accumulation versus distribution, harmony versus disharmony, trend versus correction. The core model is simple: wait for a market to cross an old level, and then prove it can hold above, it in time. Time validates, volume often deceives. A secondary test is the market's oath. Operationally, we count bars, we mark windows, we require two confirmations: a higher swing high and a successful retest on lighter activity. Risk is defined before entry, never after. The psychological resolution is subtle. Anxiety dissolves into observation. You feel the tempo shift from chase to cadence. If the reward goes to the board, what exactly are we waiting for? In the next chapter, we draw the framework, the law that makes patience precise. We will name the cycles, mark their seasons, and test every claim twice. We begin with the governing law: time dominates price. Gann wrote that markets change trend when time is due, not when opinion changes. So we build a master clock. Cycles nested within cycles, minor swings, weekly rhythms, seasonal turns, anniversary windows. Patience becomes precise when it is tied to a date and a count, not to a mood. The question from before, what are we waiting for, has an answer: the confluence of time with structure. Framework first. Draw a swing chart to reveal direction without noise. Mark the last overbalance in time and price, the largest correction in the current trend. As long as new reactions are smaller than that overbalance, the trend is intact. Define the enemy as false urgency rallies that look large but consume less time than the prior decline. Retests that push price but lack duration. Time exposes pretense. Now, the core model. We use three elements in harmony: crossing an old level, a secondary test within a time window, and a measured angle of advance. When price crosses an old high, wait for a window, often 1 to 3 bars on the active time frame, for a retest. The best retest drifts back on lighter activity and holds above the level for a definite count. The angle rate of climb should not exceed the trend's sustainable pace. Operational rules: count bars, require confluence, scale risk to structure. Enter on proof, not promise. Place the stop beneath the test that validated the level. If time fails, if the market cannot hold the level for the window, stand aside. Mastery feels unhurried. You observe, you confirm, you align. Next, we diagnose why the crowd resists this law and how boredom becomes your edge. We will map crowd impulses against these windows, expose their premature entries, and build a checklist that converts patience into repeatable, measurable advantage daily. The first profitable act in markets is not action, it is stillness. The common belief says, speed wins. WD. Gann inverted it. Time governs price, and the fastest profit is earned in the slowest manner. He watched the clock of cycles the way a navigator watches stars, looking for harmony, proportion, and the overbalance that signals change. The pain is familiar. FOMO pulls the hand to click. Impatience turns a watch list into a roulette wheel. Yet the law is definite. Prediction is vanity. Confirmation is duty. A trade begins only after price crosses an old level, and time agrees. Volume may sing. We wait for its second verse, the secondary test on lower activity. The crowd wants climax. Gann wanted confluence, angle, level, season, and vibration aligned. If this resonates, stay with me as we turn patience into a method. Consider the 1x1 angle as a moral line. Above it, the trend proves itself by holding time. Below, it admits weakness. A swing chart reduces noise to structure. The overbalance of time quietly tells when a correction is no longer a correction. Rules replace impulse. 1 confirmation in price, 1 in time, and a test of volume tone. Risk is set where structure says the premise is broken, not where fear twitches. Mastery does not feel exciting. It feels measured. Boredom becomes a compass. Confidence comes from obeying the calendar, not the crowd. We will now name the framework that makes patience tangible and repeatable, but one test still remains. Most traders collect indicators. Gann collected laws. The governing law is simple and severe. Time dominates price. We begin with the master clock, minute to day to season, season to anniversary. Cycles are vibrations. Some are loud, some are faint, and their confluence creates windows where probability concentrates. The paradox: you do not need more signals, you need a calendar. We map structure with a swing chart, then grade corrections by overbalance of time. If the present pullback takes more time than any prior pullback in the advance, the rhythm is broken. The engine has changed gears. We draw the 1x1 angle to impose proportion. A trend that respects this angle proves harmony. One that cuts through it confesses disharmony. The enemy is the illusion of precision without law, random entries, emotional stops, volume read without context. The core model is orderly. Zones, cycles, angles, and tests. Zones are old levels where campaigns turned accumulation versus distribution. Cycles define windows, monthly turns, seasonal pivots, and quiet anniversary echoes. Angles deliver the rate. Tests confirm acceptance. Operational rules are definite. Trade only when price crosses an old level and stays beyond it through a time window. Demand a secondary test, a return to the level on reduced volume and narrower spread. Place risk where the structure fails the other side of the test. Size positions so a single loss is tolerable and a series leaves capital intact. Mastery feels like restraint. You observe, you confirm, you align. If the secret is to wait, what exactly are we waiting for? The answer lives in the failures of the crowd. Crowd behavior is not chaotic. It is mechanical exhaustion dressed as emotion. The average trader chases expansion bars, equates volume with truth, and confuses motion with direction. Impatience is the engine. Illusion is the exhaust. Gann watched a different gauge. Time spent. A rally on great enthusiasm that cannot retake an old level within. Its expected window is distribution in disguise. A breakdown that stalls near prior lows, retests on lower volume, and uses more time to fall than it did to rise is accumulation, not danger. The crowd rushes on first touch. The professional waits for the secondary test. The crowd celebrates a breakout. The professional asks if it holds through the cycle window. The crowd draws lines after the move. The professional marks levels before the session opens and lets the day answer. 3 recurring crowd patterns betray themselves. First, the early chase. A long taken into resistance without crossing and holding, stopped by the very level everyone ignored. Second, the late short, selling into the tail of a down move as time overbalances against further decline. Third, the misread retest, abandoning a valid level because volume spiked on the initial move, not noticing the quiet return that confirms acceptance. To see these, reduce the market to its engine. Swing, time, test, note narrowing, ranges near levels, observe season and anniversary windows, and listen when volume falls on a retest. The professional identity is an observer, not a predictor. Confirmation beats opinion, but detection demands a checklist specific, repeatable, and merciless. Now we will dissect the confirmation itself. Prediction flatters the ego. Confirmation funds the account. Application is the quiet bridge between the two. Begin by drawing the operating zone, not the target. Mark the prior swing high and swing low on a simple swing chart. The market declares its intention when it crosses old levels with force and then respects them with restraint. The first law is temporal. Act inside a time window, not a whim. Align an active cycle, a weekly vibration, or a month's anniversary of a prior extreme with present price. Time first, price second. The second law is structural. Seek overbalance. If a rally's correction is smaller in both time and depth than the last decline's average, the crowd's pressure has shifted. Trend is reasserting. The third law is behavioral. Wait for the secondary test. After the initial break or breakout, price should retest the level on lower volume and narrower range. Accumulation accepts a quiet pullback. Distribution tolerates a timid rally. Only when confluence appears time window, structural overbalance, and a clean secondary test move from observation to action. The rule is mechanical. Enter on the close back through the level after the test, place a definite stop beyond the test's extreme, and risk a fixed fraction. Do not average losers. Scale only after a measured swing in your favor, and another minor test holds. Boredom is a tool, not a penalty. Between signals, record windows, and watch for alignment. During signals, execute without drama. The enemy is improvisation. The cure is checklist. One can trade fewer decisions with greater conviction when the market agrees in 3 languages: time, structure, and behavior. This is how prediction melts into discipline. But one test still remains. Can you distinguish exhaustion from true quiet, the difference between silence before reversal and silence before continuation? We arrive where the outer method becomes an inner posture. The chart taught us patience by refusing to move on command. The clock taught us precision by striking only at its appointed minute. Now the creed is simple: confirmation over prediction, time over opinion, harmony over impulse. You already know the enemy: impatience disguising itself as urgency, boredom masquerading as danger. The cure is mechanical. Define your zone, identify the dominant swing on the swing chart, and wait for price to cross an old level and hold one complete bar, then a secondary test. Require an overbalance. If the prior reaction lasted 8 bars, demand 9 in your favor, or an equal range. Volume may sing or remain mute, but time must answer. The master clock is the final arbiter. Treat confluence as law, level, time window, and structure must agree. Risk is a fixed gear in the engine. 1 unit, never negotiated with emotion. Enter only when the market shows you itself. Twice break and test. Exit where the structure says, not where your feeling prefers. Move to break even, only after a new swing is confirmed. Until then, accept the cost of truth. Stand aside when ranges narrow without time alignment. The absence of trade is not the absence of work. Keep a record like a navigator keeps a log: angles reached, anniversaries observed, windows respected. The identity shift is quiet, from actor to observer, from chaser to measurer. Boredom becomes a resource. Discipline becomes relief. The mind no longer hunts. It waits. One rule, one reason, one risk. If the secret is to wait, we now know what we wait for. The market's confession, signed in time and sealed in structure. The code is complete only in practice. Begin again tomorrow, measured and orderly, and let patience do the heavy lifting. The discipline is simple, and because it is simple, it is hard. You are not hired by the market to predict. You are employed to confirm. You arrive with a measured plan and depart with a measured gain. The creed is orderly. Time rules price. Confirmation defeats opinion. Boredom is the fee you pay for precision. Let the swing chart be your compass. When the current swing overbalances the prior correction, trend has spoken. When price crosses old levels in a time window you mapped in advance, alignment exists. When a secondary test returns to the breakout on reduced volume and holds, accumulation is working. In disharmony you stand aside. In harmony you act, small and exact. Your engine is risk. Set the maximum loss before the signal appears. Never negotiate with a moving market. If it violates the level that defined your premise, you exit as a function, not a feeling. Maintain a master clock. Mark cycles, seasons, and anniversaries. Do not trade the date. Trade the confluence when time meets structure. Volume can deceive. Let it assist, not decide. The crowd seeks sensation. The professional seeks repetition. One setup, many occurrences. One law, many charts. Your identity changes from hunter to custodian. You guard capital. You curate trades. You collect confirmations. The checklist is your ritual. The journal is your mirror. Gains are not the reward. Adherence is. When boredom arrives, invite it in. Boredom means you are waiting inside your edge. Serenity is the signal that your process fits your nature. In the end, you will know mastery by the absence of urgency. The market becomes a measured conversation, not a contest. Keep the creed short, the method definite, the patience long. Next, study how risk scales through cycles. When to add, when to sit still, and when silence is the most profitable trade.